So for this problem here, there's a number of requirements, so I'm just going to go down through them quickly and explain where the numbers are coming from. So what you're given here are T accounts, which are meant to replicate the financial records in a company. So you're using this information to be able to answer some of the questions. So you're given a list of 10 questions. So the first one is, how much direct materials were used? So the answer is 30,000. So to figure out where that came from, if you look on your raw materials inventory, it has 32,000. And what happens here is if you trace through the raw materials from the T account, you'll see that we're crediting $32,000 worth of raw materials. Remember the terms raw materials, direct materials, we use those interchangeably. So you remove $32,000 worth of raw materials. 30,000 of that is going to be used in the manufacturing of the product. So that's the 30,000 you see in your work in process inventory T account. Then the 2,000 you'll see in manufacturing overhead, because some of the materials used are applicable to all jobs. So it's not just one particular item that you're making, so it goes into your overhead account. And so that explains both the 30 and the 32. So again, you'll see where the other side of this entry is actually the 32,000, and that was over in your raw materials. So all you're doing is taking 32,000 out of raw materials, you put 30 into your direct materials used, and 2,000 into indirect. The labor used, this information is in your work in process, so it's the 60,000 in labor, and where you're coming up with that is if you look at your wages payable, you have in wages payable you have $70,000. And what that's comprised of is 60,000 is direct labor and 10,000 is indirect labor. So recall that indirect labor, that could be your supervisor, your janitor, your security folks, those types of expenses. So it's your $70,000, and that's from your wages payable. That's where that comes from, okay? Now, the cost of goods manufactured. So the cost of goods manufactured, where this is coming from, if you look at your work in process inventory, you'll see a credit in that account of 123,000. So what happens is when your work in process is finished, you are going to move it over from your work in process, because if it's finished, you don't want to leave it in that account. What you do is you want to move it over into your finished goods. So the cost of goods manufactured is the 123,000. The cost of goods sold, the 111,000, if you look at your T account for finished goods, you'll see a credit there of 111,000. So what that's telling you is, if something is coming out of finished goods, remember finished goods is an inventory account, so finished goods, that's inventory. So if you're reducing a asset account on your balance sheet, which is what we're doing here, so we're saying that from our finished goods inventory, we're reducing that by 111,000, so that means we really sold it. If it's coming out of finished goods, it's sold, so it goes into your cost of goods sold. So our next one we're asked to identify is your actual manufacturing overhead. So the actual manufacturing overhead, that would be the three amounts that are listed in the debit side of of your T account for your manufacturing overhead. So you're given all three. The allocated overhead comes to $48,000, so that is the credit side. That will be your credit in your manufacturing overhead account. So what we're doing here is, remember when we calculated in the previous problem the predetermined overhead rates? So what the company was doing, each month it would allocate a portion of its overhead based on this predetermined rate. So during the course of the year, all of this added up to $48,000. So we have allocated that out to the various jobs that we've worked on during the year. So we can now figure out what that predetermined rate was. And we're kind of backing into it because here we know that the allocated rate was $48,000 and the direct labor was 60. So it's based on 80%. So whatever was incurred, in this case for labor, you're saying 80% of that would also be allocated to overhead. And the final one that you're asked to look at here is your manufacturing overhead. So what is the actual balance left in the account? Well, when you look at the manufacturing overhead account, the debit side, the three entries there add up to $49,000, and that's this figure here, and you allocated 48, so you, through your estimates, you came up with 48,000. So the difference is $1,000. So you've got $1,000 remaining that you have not yet allocated. So as part of your year-end adjusting entries, you will actually have to allocate that out, and you will see that in other problems in another chapter. But essentially, at the end of the year, one of the things you have to do is close that account out to zero. So that $1,000 will have to get allocated out. You can do that in a variety of ways, which will be covered in another problem. So that concludes E30.